Hey insiders, did you know on Monday the cryptocurrency market's valuation surpassed $2 trillion for the first time, owing to a surge in Ether, the second largest digital coin? Welcome to our channel Financial Insights, the place where you are always a little bit smarter and wiser after seeing one of our valuable videos so you can develop your financial knowledge. Don't forget to press the like button and subscribe to our channel. Make sure to watch till the end. According to the price tracking website CoinGecko, the market capitalization of the cryptocurrency market has doubled in just over 2 months, as retail and institutional investors pile into the room. Bitcoin, the most common digital currency, controls more than half of the total cryptocurrency market capitalization. This year alone, Bitcoin has gained over 100%, helping to propel the cryptocurrency price higher. Bitcoin reached a new high of over $61,000 last month. According to CoinDesk numbers, the digital coin was trading at around $58,800 on Tuesday. However, it seems that Ether, the digital coin that drives the Ethereum blockchain, is to blame for the recent surge in the cryptocurrency sector. The popularity of Ethereum technology is at an all-time high. By market capitalization and regular trading volume, Ethereum is the second largest public blockchain network. It has already experienced impressive growth in its brief existence and continues to do so. On spot exchanges, an average of $231 million in Ether was exchanged daily in 2020. By the beginning of 2021, the figure had risen to $2.7 billion. The growth of decentralized finance, DeFi, a concept that focuses on blockchains and smart contracts rather than conventional financial intermediaries, has sparked an interest. It also stems from Ethereum Layer 2 solutions, which are highly scalable and effective, as well as significant developments with stable coins, which are mostly anchored on the Ethereum network. As a result, the enthusiasm and curiosity around Ether indicate an increasing recognition of decentralization. Let's take a look at 3 major explanations for the increased interest in this rapidly evolving market. To begin, blockchain technology has gained widespread acceptance and interest. According to a Deloitte study, 40% of surveyed businesses expected to spend at least $5 million on blockchain ventures in 2020. And 86% of companies in the United States have developed or are in the process of building blockchain teams. Blockchain was ranked as a top 5 strategic priority by 55% of those polled. This widespread adoption and investment show that blockchain technology is gaining traction among those seeking to use it to enhance business processes or conduct transactions. Due to its DeFi and scalability credentials, Ethereum has emerged as the most developed cryptocurrency for these purposes. In addition, the crypto industry structure improved in 2020, thanks to increased participation from spot exchanges and custodian ventures, as well as improved protection and regulation in the spot crypto market. Looking at futures markets, institutional demand has definitely aided in the recent rise of Bitcoin prices. In Q4 2020, the average daily open interest in CME Group Bitcoin futures increased by 233% compared to Q4 2019. Furthermore, in December, the number of large open interest holders in Bitcoin futures reached an all-time high, with 110 large traders owning more than 25 future contracts, 125 Bitcoin equivalent. Finally, institutions that have crypto in their portfolios need a secure platform that allows them to manage risk while maintaining price transparency and liquidity. The CME Ether futures contract provides institutional investors with a controlled market in which to gain exposure to price fluctuations without having to deal with the digital asset or questions about wallets, custodians, insurance, or other entry barriers. Participants will invest in and enter cryptocurrency markets via the Ether contract, while also managing any crypto-related risks. The addition of listed Ether futures would contribute to the development of a forward curve, allowing Ethereum market participants to better manage price risk. Traditional financial institutions, such as major hedge funds and asset managers, as well as crypto-only funds, can enter the Ether market in the coming days. Furthermore, those hedging their digital exposure accrued by spot market transactions, mining or lending operations, or project fundraising will find the Ether futures contract useful. With Ether demand on the rise, the output of futures contracts will be something to keep an eye on in the coming months. Ethereum has carved out a significant and important position in the crypto industry, whether it is seen as useful blockchain technology or a store of value. Bitcoin is also based on blockchain technology, which is a decentralized ledger of operation and a means for cryptocurrency transactions to take place. The Ethereum blockchain, on the other hand, is more of a software framework that allows developers to create applications on top of it. These apps can then be purchased with Ether. Ethereum's so-called smart contracts are a key feature. These are contracts that can be performed automatically with the help of software. The use of Ethereum in so-called decentralized finance, or DeFi, applications are gaining popularity. There are financial services built on the blockchain, such as lending, that could theoretically circumvent banks and brokerages. Cryptocurrency can be used by users of these applications to make transactions. Ethereum is also the foundation for the recent craze in non-fungible tokens, or NFTs, which are a new form of the digital asset. Mark Cuban, a billionaire businessman, owns Ether and claims it is the closest thing we have to real currency. Mark Cuban, the billionaire businessman who made his name on the reality television show Shark Tank, has recently changed his mind about Bitcoin and cryptocurrencies. When Cuban said he'd rather have bananas than Bitcoin, he made news by finding cryptocurrency too hard. However, the owner of the Dallas Mavericks has since changed his mind about cryptocurrencies, praising the emerging decentralized finance domain, which is essentially built on top of Ethereum, the second largest cryptocurrency after Bitcoin. Now, as the value of Bitcoin and other cryptocurrencies approaches $2 trillion, Cuban has stated that Ethereum's long-awaited 2.0 update will spur the growth of dwarf Bitcoin apps. The price of Bitcoin has risen by 700% in the last year, as high-profile billionaires such as Elon Musk and Jack Dorsey back it. Wall Street giants carry out Bitcoin services, and investors worry that inflation will weaken the value of conventional currencies. However, Ethereum and a few other smaller cryptocurrencies have outperformed Bitcoin in terms of price growth, with the Ethereum price up 1,100% since April 2020. Cuban believes that the upcoming Ethereum updates, which aren't expected to be finished until at least 2022, would offer some people a justification to use Ethereum as a store of value over Bitcoin. Last year, Ethereum started rolling out its big 2.0 update, which will see the network move from Bitcoin's proof-of-work consensus algorithm to the proof-of-stake algorithm to boost scalability and stability. In order to optimize the settlement of transactions, all who obtain Ethereum's Ether tokens as a reward for maintaining the network would be excluded from the method, with Ethereum users now able to deposit their tokens to protect the network and gain rewards. With Proof of Stake, you'll be able to have a substantially higher multiple in transactions per second, which will increase the utilization and opportunities to build on Ethereum. Cuban told Shin, referring to the recent cryptocurrency craze for NFTs, non-fungible tokens, as only proof of concepts for what smart contracts can do. I think Ethereum and maybe 2 or 3 other blockchains will have their place in a few years, and those will be the winners, Cuban said, adding that while he isn't going to sell his Bitcoin, he does own a lot more Ethereum than Bitcoin. Year to date, Ether is up over 180%. Companies are now interested in digital currencies. Last month, Chinese app maker Meitu purchased $22.1 million in Ether, making it one of the first major corporations to do so. Technical analysis: Ethereum had a bearish start, falling to an intraday low of $1,949.34 in the early morning before making a shift. Ethereum recovered to a late intraday high of $2,084.54 after avoiding the first big support level at $1,886. Ethereum eased down to $2,081 levels after coming within a range of the first significant resistance level at $2,086. Ethereum was up 0.18% with $2,085.02. Ethereum fell to an early morning low of $2,078.35 before rising to a high of $2,088.18 after a mixed start to the day. Early on, Ethereum did not measure the big support and resistance thresholds. To endorse a run at the first big resistance level at $2,127, Ethereum will need to avoid the pivot levels at $2,038. However, Ethereum will need support from the wider market to break out of this morning's highs of $2,088.18. If there isn't a long-term crypto recovery, the first big resistance level would possibly limit any more gains. Before any pullback, Ethereum could challenge resistance at $2,200 in the event of a breakout. $2,174 is the second main resistance stage. If the pivot level of $2,038 is breached, the first big support level of $1,992 will be tested. However, unless there is another prolonged sell-off, Ethereum can avoid the second big support level at $1,903. Are you buying Ethereum? Let us know in the comments section. Thank you for watching, follow us on Instagram, and make sure to subscribe and check out our other valuable videos about Ethereum. See you soon at Financial Insights.